Cash was Livermore's ultimate weapon, not just for safety, but for opportunity. He always believed that being out of the market is a position. Imagine standing in the middle of chaos, where everyone around you is panicking, screens flashing red, traders shouting, fear spreading like wildfire, and yet one man, Jesse Livermore, sits quietly watching. No rush, no panic, just calm observation. That was his secret, the power of cash, the patience to wait, and the wisdom to understand that sometimes the best move is no move at all. Livermore didn't see cash as idle money collecting dust. To him, cash was loaded ammunition, silent, patient, and deadly when used at the right moment. It wasn't about being inactive, it was about being prepared. While others saw cash as doing nothing, he saw it as positioning himself for the right moment to act, when the market offered maximum opportunity and minimal risk. He understood something most traders still don't, that survival is strategy. You don't have to always be in the market to be making progress. In fact, the greatest progress often comes when you're sitting still, building emotional control and waiting for the moment that everyone else is too afraid to take. Livermore's mindset wasn't just financial, it was psychological warfare. Every trader fights two enemies, the market and themselves. And Livermore learned early that cash is the shield that protects you from both. When others were trapped in losing trades, mentally exhausted, emotionally hijacked, he had clarity. That clarity gave him an edge, the ability to think clearly, see objectively, and strike decisively. Because when you're holding cash, you're not desperate. You're not forced to make emotional decisions. You're free. Free to observe, free to wait, free to choose your battles. Livermore believed that being out of the market was not avoidance, it was awareness. He knew that impatience destroys more traders than bad analysis ever could. The market rewards discipline, not activity. And holding cash was the purest form of discipline. It takes courage to do nothing while the crowd does everything. It takes strength to wait when everyone is chasing. But Livermore mastered that art. The art of waiting for the perfect setup, for the moment when fear and greed reached their extremes. That's when he moved, not before. Because cash gave him the luxury of patience. He wasn't forced to guess or predict, he could wait for confirmation. And when the stars aligned, when opportunity met preparation, he acted with full conviction, often making in days what others couldn't in years. In those moments, cash transformed from defense into offense. It became power, pure, focused power. Livermore's brilliance was in understanding that markets are emotional ecosystems. Most traders are driven by the need to feel involved. They think staying in cash means they're missing out. But Livermore flipped that belief. To him, cash was not a missed opportunity. It was the foundation of readiness. It was mental clarity in a storm of noise. While the crowd reacted, he waited. While others predicted, he prepared. And that's why when the perfect setup appeared, he didn't hesitate, he was already ready. That readiness separated him from the crowd. Because when others freeze in fear, the trader with cash has power. Power to act, power to choose, power to win. Think about that for a moment. In the markets, control is everything. Cash gives you control. When you're over-leveraged, when all your capital is trapped in trades, you lose freedom. You become reactive, emotional, desperate. But when you have cash in reserve, you have flexibility. You can take advantage of panic, buy when others are forced to sell, and step back when emotions run wild. That's why Livermore said, being out of the market is a position. Because sometimes the strongest position is the one where you're not exposed. You're watching, waiting, planning. It's the position of strength, not weakness. It's the trader's version of chess, waiting for the opponent to make the mistake before making your move. Cash is not laziness, it's awareness. It's not fear, it's discipline. It's not inactivity, it's precision. Livermore's patience was his superpower. He understood that cash was more than money. It was a mindset. A mindset built on control, patience, and preparation. That mindset made him one of the greatest traders in history, not because he always knew what the market would do, but because he knew when not to act. And that's the secret most traders never learn. The goal isn't to always be in motion, it's to be in control. Cash gives you that control. It's your buffer against emotional chaos, your weapon in uncertain times, your silent advantage when everyone else is trapped. Livermore's story reminds us that in trading, sometimes the most powerful thing you can do is wait. Because patience is not the absence of action, it's the highest form of it. The floor of the exchange was chaos. The year was 1929, the kind of day that would go down in history. Screens flickered, voices cracked, phones rang without answer. Traders shouted across the pit, their eyes wide with terror as numbers blood red on every ticker. Some tore their trading slips apart, others stared blankly, frozen. The sound wasn't just noise, it was panic made audible. the sound of fortunes collapsing in real time. And somewhere away from that chaos, sitting quietly in his office, Jesse Livermore wasn't panicking. He wasn't pacing, shouting, or guessing. He was calm, detached, watching. His face didn't betray excitement or fear, just a kind of measured stillness, like a man who had already seen the storm coming and decided not to stand in the rain. While others begged for relief, Livermore was ready, not because he had some mystical prediction, but because he had one thing most of them didn't: cash. Cash was his shield, his sword, and his advantage all at once. He understood that in the markets, survival wasn't about constant action, it was about control. And control begins with having the ability to wait. To Livermore, cash was never idle. It was potential energy, silent, invisible, yet infinitely powerful. Every dollar sitting in reserve was a bullet waiting for the right target. While others mocked the idea of sitting out, he saw the truth: being out of the market was a position in itself, a position of strength, clarity, and freedom. Most traders couldn't grasp this idea. They needed the thrill of being in a trade, the illusion of progress. They believed movement equaled mastery. But Livermore knew better. He knew that the market rewards those who wait for the perfect setup, not those who chase every shadow. He learned that the biggest risk wasn't missing an opportunity. It was being trapped in the wrong one. In a world where everyone was obsessed with doing something, he mastered the art of doing nothing, until the time was right. That was his hidden power. Imagine that moment while traders watched their accounts crumble. Livermore was sitting with a clean slate, cash in hand, mind unclouded. When opportunity appeared, when panic reached its peak, he didn't need to borrow courage or capital. He was already ready. His patience became his edge. Because here's the truth: in trading, the ability to wait is the most underrated form of strength. Most traders lose not because they lack knowledge, but because they lack patience. They confuse activity with progress, trades with growth. They think staying in cash means they're being left behind. But Livermore's philosophy flipped that entire idea on its head. He believed cash wasn't a retreat, it was a strategy. Every time he stepped out of the market, it wasn't because he was scared, it was because he was resetting his mind. Being in cash meant freedom from bias, freedom from emotional traps. It allowed him to see the market objectively, without the fog of fear or greed. When the market burned, cash kept him cool. When others were forced to sell, he was free to buy. When others were emotional, he was analytical. That's the power of liquidity. It gives you time, choice, and clarity. Think of cash like oxygen. You don't notice it when you have enough, but the moment you run out, panic sets in. Most traders operate with no oxygen, fully invested, fully exposed, suffocating when the market turns against them. Livermore refused to be one of them. He always kept cash as his oxygen supply, his guarantee of survival. He once said, "There is time to go long, time to go short, and time to go fishing." That last part, time to go fishing, was his code for waiting in cash. Not trading wasn't a sign of weakness, it was a sign of wisdom. It meant he had the self-discipline to wait for the right conditions, the right alignment, the right wave. Because he knew the market is a battlefield, and the impatient die first. The reckless run out of ammunition before the real fight even begins. But the one who waits, who watches, who preserves his capital, is the one who wins the war. In the early 1900s, when the market was a frenzy of ticker tape and rumors, Livermore built his empire not through endless trades but through selective precision. He didn't fire at every signal, he waited for confirmation. When the odds tilted massively in his favor, he moved, fast, hard, and with conviction. That's what cash allowed him to do. It's ironic, isn't it? The thing most traders fear, holding cash, was the very thing that gave Livermore freedom. While others equated cash with inactivity, he saw it as power. Power to choose, to act, to protect. He wasn't chained to the market, he was in command of it. His entire philosophy can be summed up in one paradoxical truth: the best traders are often the best waiters. Livermore didn't trade for excitement. He traded for results. He didn't seek constant action, he sought perfect timing. And perfect timing requires stillness. The kind of stillness that only comes when you're not emotionally attached to the noise around you. That's the hidden power of cash. It's not just about preservation, it's about positioning. It allows you to stay emotionally neutral while everyone else is melting down. It lets you act strategically, not react impulsively. It turns patience into profit. Livermore's calmness wasn't natural. It was cultivated. He trained himself to detach from the herd, to see the bigger picture. Every time he watched the crowd panic, he reminded himself, they have no cash. They have no control. That was his psychological advantage. He once walked away from the market for months, sometimes years, when conditions weren't right. He'd spend that time observing, studying, waiting. And when the market finally offered him what he wanted, a clear, confirmed trend, he'd move with terrifying precision. In those moments, his patience paid like a jackpot. That's why cash wasn't just a reserve for Livermore, it was readiness incarnate. He knew that opportunities come rarely, and when they do, you must be liquid, clear, headed, and decisive. The trader without cash has no weapon when opportunity knocks. The trader with cash has the freedom to open the door. Every major fortune Livermore built came after long periods of inactivity. His millions weren't made by trading constantly. They were made by waiting constantly and acting decisively. It's a lesson few can truly absorb because waiting feels unproductive. But Livermore understood the deeper truth in markets: the person who waits the longest often wins the most. So when the 1929 crash came, he didn't just survive, he thrived. While the crowd was forced to liquidate in panic, Livermore had already positioned himself for the storm. He made what was, at the time, one of the greatest fortunes in history, not through luck, but through preparation. And that preparation was built on the foundation of cash. He didn't worship money for what it could buy. He respected it for the control it gave him, the control to think clearly, the control to stay patient, and the control to move when the odds were perfect. Cash gave Livermore power over the one thing every trader battles daily: emotion. Because when you have cash, you're not trapped in fear. You don't feel the pressure to force trades, to chase setups, or to make something happen. You have the strength to wait. And in trading, waiting is everything. That's the real lesson behind Livermore's silence in chaos. The calm wasn't arrogance, it was confidence built on preparation. He knew something the crowd didn't see: that patience is profit waiting to be claimed. The hidden power of cash isn't in what it earns, it's in what it prevents. It prevents overtrading. It prevents emotional burnout. It prevents destruction. It keeps your head clear and your heart steady. And when the market finally bends in your favor, it gives you the flexibility to seize it without hesitation. So when you think of cash, don't see it as a pause in your trading journey. See it as part of your strategy. Every great move begins with waiting, and every great fortune begins with preparation. Livermore's story reminds us that in the game of trading, patience is not passive. It's power disguised as stillness. He didn't just keep cash to stay safe. He kept cash to stay dangerous, ready to strike, ready to act, ready to win. Because waiting isn't weakness. Waiting is weaponized patience. And that patience, time and again, made Jesse Livermore unstoppable. Picture this: the market is swinging wildly. Prices rise 1 hour, crash the next. Traders stare at their screens, hearts pounding, palms sweating, minds racing. Every tick feels personal. Every move against them feels like an attack. They tell themselves they'll just hold a little longer, hoping the tide turns. But deep down, they know they're not in control anymore. The trade is controlling them. They're no longer trading the market, they're trading their emotions. Now imagine Jesse Livermore in that same storm, calm, detached, composed. He's not biting his nails or glued to the ticker tape. He's not calculating imaginary profits or regretting missed entries. He's simply observing, waiting, thinking clearly. And the reason he can stay that way: he's in cash. Cash wasn't just a financial position for Livermore. It was a mental one. It gave him emotional distance from the chaos. It allowed him to step back, breathe, and see things for what they really were, not what his emotions wanted them to be. He understood something timeless. Money in the market ties your emotions to the outcome. Money in cash ties your emotions to patience. Being in cash meant he wasn't reacting, he was responding. He wasn't forced to act just to feel involved. He wasn't a slave to the market's rhythm. Instead, he could watch calmly, like a hunter studying his prey. Cash gave him the most valuable advantage any trader can have: neutrality. To Livermore, neutrality wasn't about apathy or indifference. It was about clarity. When you're in a trade, your perspective narrows. You start seeing the market not as it is, but as you want it to be. If you're long, every uptick feels like validation, and every downtick feels like betrayal. If you're short, you cheer for decline and panic at strength. In both cases, you lose objectivity. But when you're in cash, your vision expands. You see the market without bias, without hope, without fear. You see it for what it truly is: a battlefield of psychology, driven not by numbers but by emotion. Livermore thrived because he understood that to win in that battlefield, you must first master yourself. And cash was his way of mastering himself. He knew that every losing trade wasn't just a hit to the wallet. It was a hit to the mind. It drained emotional energy, clouded judgment, and triggered the most dangerous trading impulses: revenge trading, overtrading, and denial. Traders who lost money often tried to get it back immediately, doubling down, forcing trades, chasing setups. Livermore avoided all of that by doing something radically simple. He stayed out when his clarity faded. When others were fighting their emotions, he was recharging his discipline. He said once, "It was never my thinking that made big money for me. It was my sitting." And that sitting, that deliberate waiting, wasn't just about timing the market, it was about resetting his mind. Cash gave him the room to breathe, to think, to reflect without pressure. He didn't need to trade every day to prove he was a trader. He didn't need constant exposure to feel relevant. He understood that the markets don't pay you for effort, they pay you for accuracy. And accuracy requires calmness. Calmness requires clarity, and clarity requires emotional control. Cash was the foundation of that control. When you're holding cash, you have no immediate attachment to market movements. The ups and downs don't manipulate your mood. You're not checking your phone every 5 minutes to see if your position survived. You're free. And in that freedom, you think better. You observe better. You plan better. Most traders underestimate how much their emotions cost them. Not in dollars, in decisions. Every bad decision starts with a small emotional imbalance: impatience, greed, fear, pride. These feelings compound faster than interest. You lose perspective, confidence, and consistency. Livermore saw that emotional burnout was the silent killer of traders. The ones who survived longest weren't always the smartest. They were the calmest. Being in cash kept Livermore calm. It gave him emotional insulation. It allowed him to step away from the noise and reset his internal compass. He didn't need constant stimulation. He could handle silence. And in that silence he found strength. He often said that the market is designed to fool most of the people most of the time. Why? Because most people can't stand emotional discomfort. They crave certainty, action, engagement. They can't sit with not knowing. But Livermore could. He could sit in uncertainty for weeks, even months, without forcing trades. That patience wasn't natural. It was trained. And cash was his training ground. It's easy to look at Livermore's wealth and think his success came from skill alone. But skill without control is useless. What made him great wasn't just his ability to read the market. It was his ability to read himself. He knew when his emotions were too loud, when his confidence was slipping, when his ego was whispering lies. And instead of fighting those feelings inside a live trade, he would step out, back into cash, and let the storm pass. That's the level of self-awareness that separates professionals from gamblers. Modern traders can learn more from that mindset than from any indicator or algorithm. In today's world, with social media, constant updates, and dopamine-driven notifications, the pressure to always do something is stronger than ever. Traders feel guilty for being in cash. They feel like they're wasting time. They compare themselves to others posting profits online. They chase trades just to feel productive. And that's exactly why they burn out. Livermore would have told them this: you don't get paid for trading. You get paid for waiting until it's time to trade. Being in cash is the ultimate act of discipline. It's saying, I will not move until the market gives me permission. It's stepping off the treadmill of emotional exhaustion. It's choosing clarity over chaos. Let's talk about what emotional burnout really looks like. It's not just losing trades. It's losing focus. It's when your losses start to affect your confidence, your sleep, your decision-making. You start second-guessing yourself, hesitating at the right moments, forcing at the wrong ones. You become reactive, not strategic. Every losing streak feels heavier because your emotional reserves are depleted. You begin to fear missing out, fear being wrong, fear looking stupid. All those fears blur your vision. You start making trades to escape feelings, not to make profits. That's the trap. Cash breaks that cycle. It gives you the reset button you desperately need but rarely press. It reminds you that not trading is still progress. It's healing. It's reflection. It's rebuilding emotional capital, which is just as important as financial capital. Livermore knew that emotional capital was the hidden currency of success. You can replenish your account with new deposits, but you can't trade effectively if your emotional account is bankrupt. And the best way to refill it is through stillness, through cash. In cash, your thoughts settle. You start to see patterns you missed before. You detach from the need to be right and reconnect with the need to be effective. You stop reacting and start observing. That's when your intuition sharpens. That's when your discipline grows roots. For Livermore, every time he stayed in cash, he was sharpening his mind like a blade. When the next opportunity appeared, he didn't jump, he executed calmly, surgically, because his emotions were in balance. He often described the feeling of being flat, meaning no positions open, as the most peaceful state a trader could be in. Flat meant freedom. No biases, no panic, just perspective. That neutrality was his emotional armor. He knew that markets are emotional machines disguised as economic systems. They feed on fear and greed, and the only way to survive them is to step outside of their emotional gravity. Cash allowed him to do that. Think of it this way: if the market is a storm, your cash position is the lighthouse. It doesn't move with the waves, it stands above them. It gives you direction, safety, and perspective. Livermore's discipline was so deep that even after making millions, he could step away completely and sit in cash for months. Most people would crumble under that silence. They'd feel the itch to act. But he found power in restraint. Because every day he stayed in cash, he was preserving something more valuable than money: mental energy. That's what most traders fail to value. They burn through mental energy faster than they burn through capital. Every trade, every loss, every swing drains focus. Livermore treated his focus like a resource, limited, precious, and worth protecting. Cash protected it. In modern trading, where volatility and speed are higher than ever, that lesson matters more than it did in Livermore's time. You're surrounded by temptation, signals, alerts, influencers shouting, "Buy now," and "Sell now." The noise never stops. But Livermore's approach cuts through all of it. Step back, breathe, and remember, you don't have to trade every move to win. Being in cash doesn't mean you're scared. It means you're in control. You're not letting the market pull your strings. You're saving your energy for when it actually matters. That's how Livermore avoided burnout. That's how he stayed mentally fresh. When he did enter trades, his decisions came from a place of strength, not desperation. And that difference, acting from clarity instead of chaos, made all the difference. He once said, "There is nothing new in Wall Street. There can't be, because speculation is as old as the hills." And he was right. The emotions driving traders in 1900 are the same emotions driving traders today. The only difference is speed. The same greed, the same fear, the same impatience. They never change. But neither does the cure emotional control through cash. Cash doesn't just protect your account, it protects your mind. It keeps you detached when everyone else is entangled. It keeps you rational when everyone else is emotional. It gives you space to think, to breathe, to reset. Livermore didn't need to fight the market every day. He learned to fight himself and win. His greatest victories weren't in trades, they were in restraint. His calmness wasn't luck. It was the product of deliberate, disciplined detachment. And that's the lesson for every trader today. If you want longevity, you must value peace over thrill, patience over action, clarity over chaos. Cash is your anchor in emotional storms. It's your mental reset button. It's your reminder that trading isn't about constant activity. It's about controlled intensity. Livermore's genius wasn't that he could predict the market. It's that he could predict himself. He knew his limits, his emotions, his impulses. And by staying in cash, he stayed in command. So the next time you feel the urge to trade just for the sake of it, stop. Ask yourself, am I acting from clarity or emotion? If it's emotion, step back. Sit in cash. Regain your balance. Because every moment spent in cash is not wasted. It's invested in your mental strength. That's what Livermore mastered. Not just trading, but emotional control through cash. And that control, more than any strategy or system, is what made him one of the greatest traders who ever lived. The stock market is a strange, living thing, pulsing with emotion, greed, fear, and impatience. Every tick of the chart carries the heartbeat of millions of traders, each convinced they know what comes next. The noise is endless. Alerts flashing, prices swinging, minds racing. And yet, amid all that chaos, there once sat a man who moved slower than everyone else, and yet somehow always arrived first. That man was Jesse Livermore. He wasn't the loudest in the room. He wasn't glued to every tick or chasing every move. In fact, there were long stretches when he did nothing at all. He sat silent, composed, studying. While others threw themselves into trade after trade, trying to feel alive, Livermore waited, cold, focused, and patient. And when he finally acted, he didn't nibble at opportunity. He devoured it. Livermore believed in one sacred law. It's not the buying or the selling that makes money. It's the waiting. That single truth separated him from the rest of Wall Street. The others thought money was made in activity. He knew it was made in discipline. Imagine it's 1907. The market is in turmoil. Prices crash violently. Panic ripples across trading floors like a wave of hysteria. Men shout until their throats bleed. Fortunes vanish in minutes. But not Livermore. He's sitting quietly in a small office, his face unreadable, watching the numbers fall exactly as he predicted. Weeks before, he had gone short, and while the rest of Wall Street tried desperately to save themselves, he had already positioned himself for what he knew was coming. That's what waiting gave him, not just patience, but power. The power to act when the odds were perfect. The power to stay calm when others drowned in emotion. The power to see clearly when the rest of the world went blind. To Livermore, waiting wasn't idleness. It was preparation. Every moment he spent, doing nothing, was a moment sharpening his edge, observing, analyzing, building conviction. He treated the market like a hunter treats the forest. You don't chase every sound. You listen, you wait, you track. You conserve your energy until the moment the prey steps into the open. And then you strike, once, with precision. That's the difference between amateurs and masters. Amateurs crave movement. Masters crave alignment. Livermore once said, "A man must study general conditions, to size them so as to be able to anticipate probabilities." He never guessed. He waited for confirmation, the subtle clues that told him the market's psychology had shifted. When trend, volume, and sentiment all spoke the same language, that's when he acted. Not before. Not after. He knew the hardest thing in trading wasn't finding a strategy. It was mastering the space between trades. The silence, the boredom, the uncertainty. That's where most traders lose. Not because of bad entries, but because they couldn't wait for the right ones. Patience, to Livermore, was not passive. It was the most active discipline there was. Every day he observed, not to predict, but to understand. He watched how markets moved after a rally, how they behaved during panic. He studied the reactions of traders themselves, the desperation in their decisions, the patterns of their fear. That was his real data, and waiting gave him the distance to see it clearly. There's a deep psychology to waiting. In life, and especially in trading, we equate waiting with loss. We think if we're not acting, we're missing out. That's the curse of the modern trader too: dopamine, impatience, and the illusion of control. Every flashing candle feels like an invitation, every missed move feels like pain. But Livermore flipped that script completely. To him, waiting was action. It was a conscious, powerful choice to do nothing until everything lined up. It took courage, more courage than trading itself. Because sitting on your hands when everyone else is making moves feels unbearable. The mind starts whispering. What if you're missing something? What if this is the move? But Livermore's brilliance was his refusal to be seduced by those whispers. He'd rather miss 10 small trades than be early by one wrong trade. Because he knew one thing: when the market finally offered him that perfect setup, it would pay for all the waiting, and more. That's the paradox of patience. It looks slow, but it's actually the fastest path to success. Every impatient trade sets you back, every patient decision compounds your edge. Livermore's patience wasn't built overnight. It was carved from pain, from mistakes, from overtrading, from losses that taught him the brutal truth: markets punish haste. Every time he rushed, he paid the price. Every time he waited, he profited. Slowly, he built an inner calm that most traders never achieve, the calm to trust timing more than impulse. In his mind, the market was like the tide. You can't force it to move. You can only wait for it to turn. And when it does, you ride it effortlessly. Modern traders struggle with that. We live in a world of instant gratification. You can buy, sell, and exit in seconds. You can trade 24/7. The illusion of opportunity is constant. But that's the trap, because if you're always acting, you're never observing. And observation is where mastery lives. Livermore understood that 90% of trading success happens outside of trading. In the waiting, the watching, the preparation. He'd sit for weeks, studying a chart, waiting for the market to confirm his thesis. When it finally did, when everything aligned, he didn't hesitate. He went all in. That's the second layer of waiting most people miss. Patience isn't about hesitation. It's about conviction. You wait to act with full confidence. You wait so you can move without fear. He once said, after spending many years in Wall Street, and after making and losing millions of dollars, I want to tell you this is, it was never my thinking that made the big money for me. It was always my sitting. Think about that. It was always my sitting. The man who made and lost fortunes across decades boiled it all down to one thing: sitting tight. He knew the hardest part of the market wasn't spotting opportunity, it was holding yourself back until opportunity matured. Most traders jump into half-formed setups. Livermore waited until the picture was crystal clear, and when he struck hard, because by waiting, he'd earned the right to be aggressive. Waiting filtered out noise, cleared emotion, and magnified conviction. That's why his trades carried so much weight. They were born from silence, not chaos. Let's bring this lesson to today's world. Imagine two traders. The first one trades every day, scanning charts, jumping in and out, chasing signals. The second one waits. He studies a handful of setups, tests them, watches how they play out. He takes maybe one trade a week, but when he does, he sizes up confidently because everything lines up: price, volume, news, sentiment. After a month, who's ahead? The first one has 50 trades and 50 bruises. The second has 5 trades and 5 lessons, maybe 3 winners big enough to make his month. That's Livermore's legacy in motion. Waiting, when practiced correctly, transforms trading into something completely different. It becomes less about prediction and more about preparation. Less about reacting and more about observing. You become a hunter, silent, patient, dangerous. The problem is, waiting feels like weakness in a world that rewards speed. The modern trader's fear isn't losing money, it's missing out. But Livermore didn't chase opportunity, he created it through discipline. He understood that markets have seasons. Times of plenty and times of famine. You don't plant seeds in winter. You don't trade aggressively in chaos. You wait for alignment, for clarity. And that's exactly what cash and waiting gave him: clarity. When you're not in a trade, your emotions are neutral. You can think objectively. You can see the market as it is, not as you want it to be. Livermore protected his neutrality like treasure. Because neutrality breeds clarity, and clarity breeds timing. He'd often say that the biggest money in trading is not made in the buying or selling, but in the sitting. Sitting through boredom. Sitting through doubt. Sitting through the noise until the market shows its hand. It's easy to read that and nod along. It's harder to live it. Waiting is uncomfortable. It forces you to face your own mind, your impatience, your ego, your fear of missing out. That's why waiting is not just a trading strategy. It's an emotional discipline. It's a test of who you are when nothing is happening. Livermore mastered that internal war. He turned silence into strength. He learned to trust stillness more than motion. And that's why he could act so decisively when his moment came. Because he knew he'd earned it through restraint. There's a scene often described by traders who studied Livermore's life. He's in his office, watching the ticker quietly, as his assistant nervously asks if he'll take a position. Livermore doesn't even look up. He simply says, "Not yet." Days pass. The assistant grows restless. "Mr. Livermore, the stock is moving." Livermore's eyes remain calm. "It's not ready." Then, one morning, without warning, he leans forward, gives an order, large, confident. The assistant is shocked by the size. Livermore smiles faintly. Now it's ready. Weeks later, the move explodes in his favor. That story captures everything about him. He wasn't just a trader. He was a master of timing. And timing is born from waiting. For Livermore, every wrong move was an act of impatience. Every right move was born of stillness. The modern trader can learn a lot from that mindset. In a world that glorifies constant action, the real edge lies in restraint. When everyone else is rushing, your patience becomes your weapon. You let the market exhaust itself. You let the crowd reveal their hand. And when the moment comes, when emotion peaks and logic returns, you step in, calm and ready. That's how Livermore built his fortune. He didn't trade every storm, he waited for the tide to turn. The market, he said, never punishes those who wait for confirmation. It punishes those who can't. So if you ever feel restless, if your fingers itch to trade for the sake of it, remember his lesson. The market isn't a race. It's a waiting game. The one who waits for the perfect setup always beats the one who trades every setup. Livermore's waiting wasn't laziness. It was patience sharpened into strategy. It was the art of mastering boredom, fear, and greed, and turning them into timing, clarity, and control. That's the true power of waiting. It's the hidden force behind every legendary trader. Because the market doesn't reward the fastest hand. It rewards the calmest mind. And Jesse Livermore had the calmest mind of them all. The market has a rhythm, a pulse that never stops beating. It moves between chaos and calm, fear and greed, boom and collapse. And in those moments of chaos, when everyone else scrambles to survive, only one kind of trader thrives, the one who has liquidity, the one who has cash, the one who has the power to move when everyone else is frozen. Jesse Livermore understood this better than anyone. To him, cash wasn't just comfort, it was control. It was his invisible weapon, his secret armor. He knew that liquidity wasn't a passive state. It wasn't about sitting back and doing nothing. Liquidity was potential energy, power stored ready to explode when the perfect moment appeared. He would say, the only thing to do when a man is wrong is to be right by ceasing to be wrong. And often, being right began with one thing, being liquid. In the early 1900s, when markets turned into bloodbaths overnight, traders were often trapped. Their capital was tied up in losing positions. They couldn't move, they couldn't react. They were hostages to their own decisions. Livermore, on the other hand, sat quietly on the sidelines, holding cash, watching, waiting. He knew that every crash, every panic, every overreaction, eventually created an opportunity, a massive one. But only those with cash could seize it, because opportunity doesn't care about your predictions. It only rewards those who are prepared. Picture it: the market plunges 20% in a week. Brokers are calling in margin. Traders are liquidating in terror. Newspapers scream headlines of collapse. And somewhere, In a quiet office lit by a single lamp, Livermore leans back calm. He's not trapped. He's not begging his broker for time. He's liquid, and in that liquidity lies freedom. Because cash, in the hands of the disciplined, is more than safety. It's mobility. It's flexibility. It's the ability to choose your moment rather than be forced into someone else's. While the herd is reacting, you're deciding. That difference, between reaction and decision, is where mastery lives. Livermore often waited for markets to exhaust themselves, for emotion to hit its peak. When everyone else was selling in panic, he was preparing to buy. And when everyone was buying in euphoria, he was quietly selling into strength. That timing came from liquidity, because when you're in cash you can wait for emotion to burn out. You can step in only when logic returns. He once said, "Markets are never wrong, opinions often are." Cash kept him free from opinion. It gave him clarity to see the market as it was, not as he hoped it would be. Because when you're all in, your judgment is biased. You start seeing what you want to happen, not what is happening. Liquidity removes that distortion. It keeps your mind clean, sharp, and ready to act. To Livermore, liquidity was like gunpowder, useless until fired, but priceless in the moment of battle. He never saw cash as idle. He saw it as loaded potential. Every dollar uninvested was a bullet saved for the right target. That's what most traders miss today. They think being 100% invested means being productive, but Livermore knew being 100% liquid meant being prepared. There's a deep psychological truth behind that. Liquidity gives you emotional leverage. When you have cash, you're not desperate. You don't chase. You don't fear missing out. You wait for the market to come to you. And when it does, you're ready to strike with full force. That readiness, that quiet confidence, separates the winners from the weary. In every great market event, the 1907 panic, the 1929 crash, Livermore thrived not because he predicted the chaos, but because he was ready for it. While others prayed, he prepared. While others liquidated at losses, he accumulated positions at discounts. He became the shark in waters filled with bleeding fish. That readiness doesn't just happen. It's built from discipline. From saying no to mediocre trades so you can say yes to perfect ones. From embracing boredom as a sign of strength, not weakness. Liquidity in Livermore's world was a mental state as much as a financial one. It was the state of calm aggression, patient yet explosive when needed. Think about that in modern terms. Every trader today feels the pressure to always be in the market. The culture of social media, constant updates, endless signals. It convinces you that if you're not trading, you're missing out. But that's a lie. In reality, cash is a position, the most powerful one there is. Because it gives you options, it gives you control, it gives you psychological distance from chaos. Liquidity isn't about sitting idle, it's about staying ready. The patient trader with cash in hand is like a lion resting in tall grass. The jungle can roar all it wants. The lion doesn't chase every sound. It waits for the perfect moment to strike. And when it does, it moves with certainty, not hesitation. Livermore's brilliance was understanding that liquidity turns time into opportunity. When you're liquid, every tick, every hour, every day the market moves closer to your setup is working in your favor. You're not bleeding capital while waiting. You're preserving it, letting the market come to your price instead of forcing a trade that isn't ready. That's why liquidity isn't passive. It's power under control. It's the art of holding fire until the target is clear. And when it is, that liquidity transforms instantly into aggression. Livermore's trades often shocked people because of their size. But those positions were never impulsive. They were funded by weeks or months of non-action. Every dollar he didn't lose in impatience became ammunition for the moment that mattered. That's what liquidity does. It compounds patience into potential. He often said that the market gives everyone the same opportunities. But not everyone has the same readiness. Most traders are emotionally broke long before they're financially broke. They waste their liquidity on noise, and when the real move comes, they're empty, both in account and in confidence. Livermore refused to let that happen. He understood the psychological security that comes from liquidity. When you have cash, you don't fear the market. You study it. You don't panic when prices drop, you prepare. You stop reacting and start planning. That's how liquidity turns volatility into advantage. To Livermore, the market was a battlefield. The unliquid traders were soldiers with no ammunition, brave but helpless. The liquid trader was the sniper, patient, calm, deadly accurate. Let's make that more vivid. Imagine the 1929 crash, the most violent collapse in U.S. market history. Men were jumping out of buildings. Fortunes disappeared in hours. Livermore, he was short, fully prepared. He had the liquidity to position himself before the storm hit. And when it did, he didn't flinch. He executed flawlessly, earning over 100 million in today's value while the world burned. That moment wasn't luck. It was the reward of liquidity. Because liquidity gives you two priceless things: timing and confidence. Timing to wait for the exact setup, and confidence to bet big when it arrives. You can't have either without liquidity. Modern traders often misunderstand liquidity. They think it's just newsed money. But Livermore saw it as stored conviction. Every dollar of liquidity represented patience, restraint, and readiness. It was proof of discipline. And discipline, not prediction, is what builds wealth. Liquidity also carries a psychological paradox. It feels uncomfortable. Sitting in cash feels wrong. You'll feel like you're missing out while others trade. But that discomfort is exactly what makes it powerful. Because it forces you to think, not react. It keeps you grounded while the crowd loses control. That's why Livermore often looked like he was doing nothing, while others were hyperactive. In truth, he was building energy, mental and financial, for the right strike. Liquidity gave him that coiled power. He once compared trading to fishing. The impatient fisherman casts line after line, moving spots constantly, exhausting himself. The patient one sits still, quiet, aware of the water's rhythm. When the fish finally bites, he doesn't miss. Liquidity is the fisherman's stillness, quiet, watchful, deadly effective when the time comes. Livermore's philosophy teaches something deeper. Liquidity isn't just about money. It's about mental space. When you're not tied to a position, you can see the truth. You can observe objectively. You can pivot without ego. That flexibility, that lightness, is what gives liquidity its edge. In modern markets where traders are bombarded by noise, that clarity is priceless. Liquidity is what allows you to stay centered. It lets you hold your ground while everyone else is pushed around by volatility. It lets you say, not yet, when others say, now or never. And when the time comes, when that rare, high probability setup appears, you don't need to hope, you can act. You're ready. That's liquidity's ultimate gift: freedom of choice, freedom to wait, freedom to act, freedom to protect. That's what Livermore mastered. He never saw liquidity as boring. He saw it as beautiful, the silent force that made all his great moves possible. He knew that every trader eventually faces the same question: will you use your cash as comfort or as a weapon? For Livermore, the answer was always the latter. His liquidity wasn't passive. It was potential energy, compressed, focused, waiting for release. And when it was released, it changed everything. Because opportunity doesn't announce itself. It doesn't knock politely. It appears suddenly, violently, and then it's gone. Only those with liquidity can grab it before it disappears. That's why Livermore stayed liquid when others couldn't. Because he understood the simple, eternal truth of trading: you can't play offense if you can't move. So, the next time you feel restless sitting in cash, remember that stillness is power. That liquidity you hold is opportunity waiting for its moment. Don't waste it on noise. Don't burn it chasing the crowd. Save it for when the market gives you a gift, a rare, perfect alignment of price, pattern, and psychology. And when that day comes, you won't have to scramble, panic, or pray. You'll simply move, calm, deliberate, and lethal, just like Livermore did. Because liquidity isn't laziness, it's leverage, it's freedom. It's the discipline that separates those who trade for excitement from those who trade for mastery. And in the end, that's what Livermore taught the world. The real winners in the market aren't the ones who are always active. They're the ones who are always ready. Picture this: the trading floor as a storm. Screens flicker red, voices rise, fingers slam keyboards. Every trader wants to predict what's coming next: the bottom, the bounce, the reversal. They're addicted to the illusion of control. In this chaos, everyone is chasing the next candle, as if their willpower alone can bend the market's direction. But in the middle of that storm, Jesse Livermore sits still, not guessing, not forcing, just watching, calm eyes, silent hands. A man who learned, through pain and millions lost, that patience beats prediction every single time. Livermore understood something most traders still don't. The market doesn't reward those who know. It rewards those who wait. He once said, "It never was my thinking that made the big money for me. It always was my sitting." That single sentence holds more wisdom than 1,000 trading courses. Because the truth is, the market humbles thinkers who believe they can outsmart it. It punishes ego and impatience, but it quietly enriches those who can wait for clarity. See, prediction feeds the ego. Patience feeds the account. Every time a trader tries to predict, they're subconsciously trying to prove something. I was right. They want to conquer uncertainty, to feel in control. But markets thrive on uncertainty. Every tick, every swing, every fake breakout is a test of your emotional discipline. And that's where Livermore built his empire. In the silent spaces between moves, while everyone else was busy predicting noise. He believed that cash was his insurance against impulsive decisions. When you're in cash, you're not emotionally tied to the outcome of every market tick. You're free. You're detached. You can observe the storm without getting pulled into it. Most traders can't do this. The moment they go flat, they feel uncomfortable, like something's missing. They crave action, thinking movement equals progress. But Livermore understood that waiting is an action too, the most powerful one. Let's look deeper into why patience outperforms prediction. Prediction is based on ego, on the assumption that you can foresee what millions of minds will collectively decide tomorrow. But patience is based on observation, on letting reality show its hand before you act. Livermore never guessed. He waited for confirmation. He waited for patterns to complete, for emotions to settle, for trends to reveal themselves. Because when the market finally aligned with his setup, there was no hesitation. He struck with full conviction. And that's the paradox. The patient trader looks lazy to the impulsive trader. They see someone doing nothing and mistake it for indecision. But inside that stillness lies power. Because every day you don't trade out of boredom or ego, you're saving mental capital and financial ammunition for when it truly matters. Livermore used to say, there is a time to go long, a time to go short, and a time to go fishing. That fishing time, that space of inaction, is where true discipline lies. Think of the modern trader today. Screens are everywhere. TikTok signals, YouTube analysts, Discord groups shouting, buy and sell, every minute. Everyone wants to be early. But Livermore didn't care about being early. He cared about being right. He waited for the market to confirm what he already suspected. His timing wasn't about guessing. It was about aligning. Because when you align with the market's rhythm, you don't need to predict. The trend itself tells you what to do. This difference between prediction and patience is psychological at its core. Prediction gives the illusion of control. You feel smart, engaged, alive. But patience gives you real control, control over your impulses, your emotions, your capital. Every time you resist the urge to predict, you strengthen the muscle that matters most in trading: self-restraint. Livermore knew that rushing was the enemy of precision. When you're constantly predicting, you're reacting emotionally, not strategically. You chase setups that aren't ready, you enter early, you get shaken out. But when you're patient, you let the market expose the truth. And that truth always reveals itself, whether in the form of exhaustion, accumulation, or panic. The patient observer doesn't guess which one, he waits to see which one unfolds. There's a famous story from Livermore's 1907 campaign. When the market began to crack under selling pressure, everyone was panicking, trying to predict the bottom. Livermore waited. He watched the tape until the selling became absolute, until no one wanted to touch stocks. Then, quietly, he started covering his shorts and began buying when fear had peaked. While others tried to call every bounce, he waited for the bounce. That's the essence of patience, letting the market finish its tantrum before you step in. Patience is not passive, it's active observation. It's controlled stillness, it's waiting with intent. Every patient trader is secretly a predator. They wait in the shadows until the prey, the perfect setup, exposes itself. Then and only then, they strike with precision. Livermore didn't waste bullets on every movement. He saved his ammunition for moments of absolute clarity. That's why his profits were massive, because they were concentrated in rare, high-probability opportunities. But let's talk about the modern parallel. In today's algorithmic world, everyone wants instant results. Micro trades, scalping, signals. Speed, it's all dopamine-driven. Traders want to feel productive. But productivity in trading isn't measured by clicks, it's measured by restraint. The more you can wait, the more selective you become. And the more selective you become, the less you lose on noise. Livermore's cash position gave him that freedom. It was like an anchor in a sea of chaos, keeping him grounded when everyone else was tossed around by emotion. Patience also protects your psychology. When you're constantly predicting, every loss feels personal. It's like your intelligence is being attacked. But when you're patient, every loss is just data. You're detached from outcome. That detachment is your mental shield. It's what allows you to see the market clearly, without distortion, without emotional fog. Cash buys that detachment. It buys time to think, to breathe, to let the market reveal its truth. Livermore's philosophy can be summed up in one principle. Don't anticipate. Wait for confirmation. That rule sounds simple, but it's the hardest to live by. Because waiting goes against human nature. Our brains crave action, prediction, movement. But the market rewards the opposite. It rewards silence, observation, patience. Every great move in history, from the 1907 crash to the 1929 bear market, rewarded those who waited, not those who predicted. Livermore was like a chess master playing the long game. While others jumped at every opportunity, he planned 5 moves ahead. He let others exhaust themselves in the opening, wasting energy and capital, while he watched patterns unfold. By the time he made his move, the board was clear, and his path was inevitable. That's how patience quietly annihilates prediction. Prediction burns out fast, patience endures. Let's bring this home for today's trader. Every time you stare at your chart and feel that itch, that voice saying, "You'll miss it if you don't act now," that's your ego whispering. That's prediction trying to seduce you. And every time you silence that voice and wait for clarity, you grow stronger. The patient trader wins not because they predict right, but because they avoid being wrong. That's Livermore's real genius, not his profits, but his discipline to not trade when the market wasn't aligned with him. He knew that money made through patience is sticky. It stays. But money made through prediction is slippery. It leaves as fast as it came. Because prediction-based profits are built on luck. Patience-based profits are built on structure. One is emotional gambling, the other is strategic mastery. So, what does patience look like in practice? It means waiting for your setup to meet every condition, technical, emotional, and environmental. It means saying no to 9 out of 10 trades. It means using cash as a weapon, not a weakness. It means sitting in silence while the world screams for action. That silence is where real traders are forged. Livermore's patience wasn't passive boredom, it was active confidence. He trusted the process. He trusted that if he waited long enough, the market would hand him an opportunity on a silver platter. And when it did, he didn't hesitate. That's the paradox of patience. The longer you wait, the faster you act when the time comes. And maybe that's the ultimate lesson from Jesse Livermore: you don't win by predicting tomorrow. You win by preparing for it. The trader who waits, who preserves capital, who refuses to be seduced by noise. That's the trader who survives the storms and captures the sunshine that follows. Because in the end, patience is not just a trading skill. It's a mindset. It's emotional maturity disguised as inactivity. It's the art of doing nothing until doing something makes absolute sense. Livermore mastered that art. And that's why, while others guessed, he waited. And while others fell, he rose. Patience didn't just outperform prediction. It conquered it. In the world of trading, one of Jesse Livermore's most overlooked yet powerful lessons is the strategic use of cash as a weapon. He believed that staying liquid during uncertain times wasn't a sign of weakness, but of superior discipline and control. When markets become unpredictable, the smartest move isn't always to trade, sometimes it's to wait. Holding a cash reserve allows a trader to survive volatility and capitalize when a true opportunity appears. Most traders burn out not because they lack strategy, but because they lack patience and preparation. Livermore knew that uncertainty is temporary, but capital destruction can be permanent. By keeping a reserve, you buy yourself the luxury of mental clarity, emotional balance, and financial readiness. When fear dominates the market and prices become irrational, that's when liquidity becomes your greatest advantage. Cash gives you the flexibility to act when everyone else is frozen by panic. It's not about missing out. It's about preserving your ability to strike when the odds turn extreme. This approach prevents emotional trading, which is the biggest enemy of long-term success. Every trader faces moments of exhaustion and doubt. In those phases, cash acts as a cushion against emotional burnout. It lets you step back, think clearly, and reset your focus without the pressure of open losses. Remember, trading is a mental game first and a financial one second. Liquidity is your defense mechanism against both chaos and fatigue. Livermore's greatest trades didn't come from constant market activity. They came from extended periods of observation, waiting patiently for the perfect setup. He understood that profits are made by waiting for high-probability opportunities, not by forcing trades out of boredom or fear of missing out. That's why his golden rule was simple: only deploy capital when the odds are extreme. When a setup aligns perfectly with your analysis, your risk is controlled, and the market shows a clear imbalance. That's when you strike with size and conviction. Everything else is noise. This rule creates separation between amateurs and professionals. Amateurs chase every movement, while professionals conserve energy and wait for confirmation. By adopting Livermore's mindset, you train yourself to respect cash not as idle money, but as a strategic position. Every dollar held is a bullet reserved for the right moment. The discipline to do nothing until the right time is what separates winners from survivors. In volatile markets, that discipline becomes your greatest edge. Cash protects you from emotional chaos and keeps you ready to attack when the market overextends. Ultimately, cash is not laziness. It's discipline in disguise. It represents patience, control, and strategic restraint. Livermore proved that waiting with purpose is more profitable than trading without conviction. The lesson is timeless: protect your capital during uncertainty, use cash to preserve your focus, and only act when the odds are massively in your favor. In trading, and in life, it's not how often you move, but how well you position yourself before you do. Livermore's patience didn't cost him opportunities, it earned him millions.